Are you a trader in the United States who banked huge Lamborghini money from stocks, cryptos, or options last year? Great! If you did, then brace yourselves. April is going to be quite dreadful because taxes.
Taxes!
Now, I know some of you might be saying, oh my gosh, Shay, what do you know about the taxes in the United States or the IRS? You're stuck up there in the Canadian igloos drinking maple syrup.
You're not even American.
And you are absolutely right about the maple syrup too. And that's why in this video, I've invited a special guest, a trader tax CPA in the United States, Brian Rivera.
Hey everybody, thanks for having me.
I'm going to be asking Brian a lot of tax questions for all of you traders in the United States on some key topics such as how to qualify for trader tax status and avoid wash sale rule. How can a trader maximize tax deductions and form an LLC to save even more money on taxes? And many other topics. So if you want to learn how to keep more trading profits in your pocket, make sure to watch the entire video and don't forget to drop a like at the bottom of the video. It's absolutely free to do so, unlike
paying for taxes.
Hi Brian, thanks for joining me today. And Brian, you're actually the first guest we ever had on the Humble Trader, the channel here.
Thanks for having me. That's awesome. I feel honored.
Yeah, and I'm so glad, that I found you. I found your channel as a CPA in the States to be able to come in and talk about taxes as a professional and to help traders and think about how to save on taxes.
Absolutely, yeah. So that's definitely something that I've been doing since 2014. And so any way I can add value to the trading community, I'm always for that.
So really quick here, I'm sure this is a top of the question for everyone, all the traders in the States thinking, what is the best way for active traders in the US, whether they're swing traders or day traders, to save on taxes?
Yeah, that's a great question. And so, a lot of times what will happen is people will jump in the stock market, they'll either have early success or they won't, and they'll think about taxes as an afterthought. And so usually, step one that I always recommend is that they understand what it means to be an active trader in securities. And that's just because the IRS has guidance out there that if you qualify, then you'll be able to strategize. And two of the things that you'll be able to do is, one is you'll have the ability to write off your business expenses. So a lot of times new traders getting into this profession will experience some costs like education, software fees, locate fees, stuff like that. And then the second piece of that is mark-to-market accounting, which we'll probably touch on here shortly.
Okay, so is this qualification, because I've been hearing a lot of traders I trade with talking about this trader tax status. Could you talk a little bit about that and how exactly do you qualify for it?
Yeah, so trader tax status is basically, it's a baseline of how you know if you qualify. So the IRS, if you actually read the guidance, it's IRS Tax Topic 429. And if you actually read it, it doesn't make any sense. And so how we've tried to simplify it within our firm, and this is what all of our associates do when we get a tax client in or a trader client is, we run them through something called the BEHAVE test. I just love acronyms. And so B stands for business expenses customary to a trader. So what we'll do is we'll look to make sure that, hey, are your expenses reasonable and necessary? And does this align with what's acceptable in the industry? Secondly, we'll look at E stands for equipment. So that's basically equipment used in trading. And so a lot of times traders trade from a laptop, cell phone. They get all to the point where they have multiple monitors. And usually, that I see that for the scalp traders especially. H stands for the hours in the market. And so usually as a trader, you got to have at least 4 hours in the market. What's that? BHE. A stands for average holding periods. Average holding periods is basically your holding periods of the stocks that you're holding should not exceed 31 days. And that's just because we want to see regularity and continuity. The V stands for volume. So the volume of your trades needs to be at least 720. So how we look at a trade is based on transactions. So if you bought 500 shares of Tesla, you sold 500 shares, that's 2 trades. Now, if you scale in, let's say you break it up into orders of 100, then all the way up to 500, that would be 5 on the buy and then 5 on the sell. And then the last piece is E, which is the extent at which you trade. And so what that means is basically you got to have a trade on at least 75% of open market days. So the stock market is open 252 days on the year. So 75% of that would be 189. If you meet all those criteria, you're basically there in qualifying as a trader.
So that means if I'm in the US and I qualify for trader tax status, then I can write off all the trading deductions.
Correct. As long as those deductions are reasonable and necessary, then yes, you can write off those expenses against your net short-term trading gains.
And that also means if I don't qualify, then I cannot write off any of the expenses. And the losses are only capped at $3,000, right, per year?
Yeah, that's partially correct. So if you don't qualify as a trader in security or an active trader, then you won't be able to write off your business expenses. And then also, if you don't qualify as a trader, then you're in what's called capital loss territory. So let's say you lost $10,000, then you can write off $3,000 against your other income, and you have a capital loss carry forward of $7,000. Now, the capital loss criteria, it really is only applicable if you're not a mark-to-market trader. And so one of the conditions of being a mark-to-market trader is you have to qualify for trader status. So you have to get that out of the way. And then the second step is you got to make sure you have an election on file, because you could qualify as a trader but not have an election. And in that situation, you're still stuck with $3,000 in losses.
This is only the second question in, and my head is like ready to explode. Oh my God, trader tax is so complicated. So we just talked about qualifying for trader tax status, and I think that's great for traders and being able to optimize more deductions. But what about forming an LLC? Because I do see a lot of traders asking me that in the comment section. When do you think would be a good time for active traders to form an LLC, and why would that be beneficial for certain high-income traders?
You actually partially answered that question. So a good time for a trader to start thinking about an LLC is, there's a couple situations, but one is you're looking for additional deductions that you can't get as an individual. And an example of those two would be the ability to contribute to a retirement plan, specifically a solo 401k, which for 2022 allows $61,000 in contributions. The second piece is the ability to write off your health insurance. So those are two deductions you can't get if you're not inside of an S corporation or an LLC tax as an S corp. So that would be two reasons why. And there's other things that we can also do inside of those entities, but I don't want to confuse you for the purposes of this of this question. Yep.
Okay. Thank you for helping me not explode my head. And another question I hear a lot of traders ask me is wash sales. And they are saying, oh, it's like a nightmare to track it. What's the advice you would give as a CPA for traders to navigate around this?
Yeah, that's a great question. And the last 2 years, I would say there's been a boom in the retail market, and a lot of people got a rude awakening on what this wash sale rule means. And so very high level, what a wash sale is anytime you take a loss on a trade and you turn around and buy that same stock or trade that same stock in a 30-day window, IRS basically says, hey, that loss is disallowed for tax purposes, and it gets added to the cost basis of your very next trade. And so it's normally not a problem if you're a trader that, let's say, you don't trade the same names over and over. But if you're a momentum trader, let's say you trade Tesla every single day, well, you're going to flag wash sales all across the board. So as a trader, how you keep yourself safe is two ways. First way is if you're not a mark-to-market trader, then you need to sit out of that name for at least 31 days. The window is 30 days, but I say 31 days to be safe. So either A, you stop trading that name in the month of December to let the wash sale period cool off, or you don't touch that name in the month of January, because wash sales are 30 days before and 30 days after. The second way you can protect yourself is you can elect what's called Section 475 mark-to-market accounting. And so what mark-to-market accounting does is it changes the nature of your tax reporting. So now you no longer have wash sales, and your gain and loss is realized as of the end of the trading day.
And how hard is it to elect that mark-to-market accounting?
It's not hard at all. There's two ways to do it. So the first way is, let's say you're a trader and you trade under your social security number as an individual. Well, you have to make the election ahead of time. So we're in 2022, And so if you want to be a mark-to-market trader for 2022, you need to have an election statement filed with your tax return by April 15th. You're just notifying the IRS. You're just telling them, hey, I qualify as a trader. I'm electing mark-to-market this year. You're going to sign that and file it with your tax return or extension by April 15th. You're going to send it off. Once you do that, you'll contact your broker. You'll say, hey, E-Trade, hey, Fidelity, whoever you trade at, and you'll say, hey, I qualify as a trader. Please update my tax reporting. That's all you got to do for this year. Then when you go to file your 2022 tax return, what you're going to do is you're going to complete that process by filing what's called a Form 3115 application with your 2022 return that gets filed next year. You file that with your tax return, and then you send another copy to the IRS National Office. That's all you got to do. Now, if you're a brand new taxpayer, let's say you created a new entity in February. Let's say you decided, you know what, I'm killing it, I'm crushing it, I'm ready to be an LLC. Well, you can elect it the day the LLC is open. All you got to do is you put a memo in your corporate records, you sign it, you file it away. And when you open up your brokerage account under your LLC, you just tell the broker, hey, I'm a mark-to-market trader, and you're set up from day one, and you don't have to do everything that I just said. You're good to go with the brand new entity.
So traders, remember what Brian just said. April 15th of this year, right, is the deadline to elect mark-to-market accounting?
Exactly.
Okay, very important because it would suck to not be able to trade the same tickers within 30 days. And also, does that mean if I elect mark-to-market accounting, would that allow me to kind of recognize all the losses I took prior to that?
Yeah, so unfortunately, the way the mark-to-market election works, it is on a go-forward basis. And so anything that happened up to the year that you filed mark-to-market, unfortunately, you can't retroactively adjust those losses. So if you remember how I mentioned earlier, there's something called capital loss treatment. So let's say you were day trading for 3 years and you accumulated 100,000 in day trading losses, and you decide, hey, I just learned about this mark-to-market, I want to elect it. When you elect it, it's not going to change the $100,000 losses that you had. You're going to recognize $3,000 every single year until that's used up. So a lot of times what I'll tell traders is if they have that market tuition and they have big losses, what you want to do is you want to get out of that capital loss hole first, because that's a tax benefit to you. Although you have losses, it's also going to offset all your future income. Then once the losses are used up, then you elect mark-to-market and you're protected going forward.
Brian, let's say I made a killing trading GameStop, AMC in 2021 with all the Wall Street bet hype and all the movements. I'm sure a lot of traders made a ton of money. And if I want to pay no taxes, how do I do that?
I would say that, with the tax year already being over, it's really hard to tax plan after the fact. And so usually tax strategy, tax planning happens outside of tax filing season. And so that's why it's really important you always maintain a relationship with your accountant or your CPA firm. Yeah, and then the thing is trading it's unpredictable. So one quarter you can have a great year or a great quarter, and then the second quarter it cannot be as good. So it's very volatile, just like a stock chart. But at the end of the year, you might say, whoa, man, take a step back. It's like, man, I did a really good job. But as long as you can catch that before we cross the end of the year, then there's still some stuff that we can do for you. But if you wait until it's time to file your taxes, that is not the time to tax plan.
Is that why a lot of baller traders move to Puerto Rico to pay less tax?
Yeah, so Puerto Rico has probably some of the best regulation for traders and investors. So I have a lot of clients that have gone there. I have a lot of clients that have came back after going there and making a killing. And the reason behind that is Puerto Rico has a statute which is called Act 60. And basically what Act 60 is it's you establishing permanent residency in Puerto Rico. And there's a couple other standards or regulations that you need to hit. But as soon as you establish permanent residency, from that point forward, you pay 0% on all of your capital gains. So if you're somebody who is mobile, somebody who is not attached to your state, and you're free to go wherever, I highly recommend going to Puerto Rico, because that is the ultimate tax strategy, in that any money you make from investing is going to be taxed at a big fat zero. 0%, yes.
0%?
As a CPA, do you get a lot of people complain or I guess rant to you about, they're making a lot of money, but it feels like the government is taking everything away? And how would you respond to that?
Yeah, so unfortunately, that is a very popular complaint that I receive. And so before we try to address the problem, is I always like to level set, and I always just say, hey man, for every trader that's banking, there could be 5 or 10 that would gladly switch positions with you. So if you're in a position where you actually have to pay tax, consider yourself blessed. And once you kind of have that mindset, it's like, man, I'm actually blessed. I can work in my underwear. I can day trade in my office. I can do all these things. You're blessed, right? And then from there, it's like, okay, now let's find a specialized firm like us to see what can we do to start chipping away at that money to make sure that you're not giving Uncle Sam more than you need to. But it's an honor to pay tax. It's just, what can we do to bring that number down?
Yeah, I agree with that because it means if you're having to pay a lot of taxes, means you're at a higher tax bracket. I would much rather be, making $400,000 and have to pay, let's say, $200,000 in taxes than making 50 grand and only have to pay, let's say, $10,000 in taxes. I think we have to put everything into perspective, right? Right,
absolutely. Agree 100%.
Thank you, Brian, for coming in today and answering so many of these frequently asked questions from traders.
Absolutely. These questions were hard, but it's been my pleasure to answer those. And for anybody else that's looking for more content around entrepreneurship, personal finance, day trading, investing, feel free to check out my YouTube channel, Brian Rivera CPA, and we'll catch you at the next video.
Thanks, Brian. Have a good one. Traders, if you got anything from this video, if you learned about how to save Lamborghini money, then make sure to drop a like at the bottom of the video. It really took Brian and I a lot of time and planning to make this happen. So feel free to check out Brian's YouTube channel for even more resources on taxes. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next time.